Hello and welcome to another ACY Securities daily report video. My name is Alistair Schultz and I'm going to be your host through today's trading journey. The first thing to look at today is on the FOMC for tomorrow. There's been a lot of talk about what might be happening at the Fed meeting. We are in that blackout phase right now. And I've highlighted a couple of things that I'm going to be watching for tomorrow. Now, the first thing is the private sector chatter. We've seen the private sector improving a lot. And now it's really a question as to whether or not the FOMC are going to take in the private sector as a part of their considerations. Now, if they do, then I would anticipate seeing a higher forecast for GDP projections and, of course, a better forecast for employment. Outside of that, I'm going to be focusing on the dot plot. Now, last time we had one of these meetings was back in December, and a lot has changed since then. We've got a new president, we've got a hell of a lot more stimulus, and we've got vaccines, or at least 3 of them, rolling out around the globe. So they are going to be an interesting case and pick. Now, naturally, we're not going to know who exactly is voting for what, but in December, we had 5 different officials wanting to vote for an increase by 2023 at the end of it. So this time around, if we are to see, say, another 4 of those official members starting to vote on that range with the pre-recorded 5, then that would indicate that we're likely going to be seeing rates starting to go up a little bit higher, a little bit earlier. So from there, obviously the next big focus to consider outside of the dot plot is the inflation and how the Fed is going to be looking at it. So far, we've been getting talked down about whether or not inflation is seriously a concern. The Fed Powell has spoken several times, linking the two between optimism and rising yields as something that are quite nice to see. And of course, inflation and yields do go hand in hand. So if they do say that they are concerned about it, then there will be something to actually be done, and we'll be able to read a little bit further on it when we do get an announcement. My anticipation is at this stage is that they'll probably stand pat and probably not do too much around the way of communication to try and keep it as if they don't mind about what's actually happening with inflation at the end of the day. Now, the last one is unemployment. And no, regardless of what we look at unemployment, we know that the unemployment figures they want to achieve. They want to be getting maximum unemployment, which means something under 4% of unemployed. So at this stage, we are much higher than that, more than a full percent higher, and it's going to take some time. And unfortunately, between inflation and unemployment, if you want to get those unemployment numbers down, then inflation will naturally go up. The real concern here when it comes to the FOMC and where we are looking at inflation right now is that the long-term inflation is lower than the short-term inflation. We don't want to have those spikes happening all the time, and we've effectively got an inverted curve going on for inflation projections right now. Effectively, high inflation fading, at least what you would look at from some of the benchmarks that are available. Now, pushing further forward to this same idea, it's worth keeping an eye on what happens in both of these areas to make sure that you have the great idea in your own head about where they're going to be moving next. And this is really what we're looking at tomorrow. I don't anticipate us seeing any difference on policy, but I do see us wanting to see where things are actually going to be going next. At the absolute bare minimum, if they do decide to actually make some changes to policy, then there is one place that I look at, and it will be about bonds. Naturally, the inflation spikes that we're seeing, or at least the bond yield spikes that we're actually seeing right now, are some of the problems that we're all concerned about. We are all worried about it, and we're starting to see a pricing in for inflation and higher yields in markets. So what might they do to try and curb that? The first thing they might do is actually increase purchases or move those purchases that they're currently doing to longer dated bonds as opposed to the short-term duration ones that we're seeing now. The other one is to use a yield curve control method, much like what we see out of Australia and Japan, though I'm not certain that that's going to be the likely option. And in fact, the more appropriate action would be to use those longer dated treasuries instead. Now, one of the things to stand in your mind is that the reflation trades stand a chance if the Fed is low touch this time round. So in other words, if we get an idea of their economic projections and where things are going to go, then it means those cyclicals, those ones that are going to do well with inflation starting to rise, are going to be the stocks that are going to do well at the announcement. Now, moving on, if you do have any questions from today's video, please feel free to get in contact with me. Any of the social media channels that you can see up on the screen behind me are available for your disposal. And don't forget to like and subscribe to this video to get more great content from me and ACY Securities in the future. Have a great trading day ahead.